All right. Well, I guess we can get things started. So maybe to start, I guess if you guys could all introduce yourselves, and then we can jump right into it. Larry, you want to begin?
Yeah, sure. Just testing if this is working. Seems like it is. My name is Larry Sakarnak. I'm the co-founder of Reverie. And really what Reverie is we think of ourselves as governance activists, the friendly type, not like the Carl Icahn hostile activists. And what we try to do is work really closely with DAOs and projects that we like and really try to grow them and scale their operations.
I'm Lauren Stefanian. I'm a partner at Pantera, and Pantera Capital is one of the oldest institutional crypto funds. We started investing in Bitcoin in 2013 and have grown a ton since then, and currently have a big fund that we just raised and are actively deploying capital into both equities in the crypto space and tokens.
I'm the guy from before.
All right. So I think a thesis that I've had on why some of the leading DeFi protocols haven't maintained the same pace of growth that they had in 2020 and 2021, obviously it's in part due to lack of scalable infrastructure. It's in part due to things like lack of institutional on-ramps. But another reason is, I think, as the scope of what these protocols are governing is expanding, it's harder to actually scale governance as you start to move beyond like these core teams. So maybe to level set the conversation, would just love to just help define for people what is decentralized governance in the first place, and what is it that we're playing for, and why does it matter? Like, why is this even a goal? Why don't we just have core teams that just do everything? Up to whoever wants to start.
Yeah, I'll make one point. I think that there's a big contrast between decentralized governance and centralized governance, right? Like we have pretty robust frameworks for like corporate governance, and we're now like testing these decentralized governance frameworks. And the reason why that's important is because there is this thesis, I guess, and I have this view as well, that decentralized governance will get to a better decision than centralized governance, right? That like more robust discussion and debate about changes and change management will lead to better decisions. And we've seen this in synthetics, right? Removing like a CEO or a founder from having unilateral control and handing it to the community has led to much better decision making. Like, the number of idiotic decisions that we made in like 2018 that now would never be able to happen given our current governance framework is really high. So I think like the idea is we need to find a way to set this up so that we can have the best decision making possible in a decentralized framework.
Yeah, I agree with that. And then I think one thing that's interesting about governance in a decentralized world is that it means something different to every protocol, and you can set it up differently. You could have different thresholds for what it means to be a voting member, unlike a centralized business where normally just the board and some executives are in control.
Yeah, I would agree with everything that was said so far. Like, one way I think about governance is, and the experiment that's being played out now is to ask the question of, for each particular decision that governance is in charge of, would it benefit from the wisdom of the crowds, or is too many cooks in the kitchen? And I think there's some decisions where the wisdom of the crowds definitely comes in handy, and then there's some decisions that shouldn't have too many people sitting at the table, and that becomes too many cooks in the kitchen. And governance is this one big experiment to see which decisions need the wisdom of the crowds versus which decisions actually just need centralized control and not too many cooks in the kitchen.
Gotcha. And I think there's almost two competing philosophies for what direction decentralized governance should go in. It's like, should we maintain kind of like structurelessness, or should we move towards a world where there's more structure and we start to more closely approximate corporate governance? So just love to hear what you're seeing. Obviously, you guys sit in different seats on different ways that communities are structuring their governance systems.
Anecdotally, from the projects we work with, and we work primarily with the larger DeFi projects, there's definitely a trend towards some level of centralization. And some people call it working groups, some people call it councils, pods. I mean, there's a million different words for it. But the idea is basically, look, having a direct democracy govern this project is chaotic. It's a little bit crazy, actually. And there's just some people who are better qualified to make decisions. And why don't we just delegate power and control to these individuals and have them run with it? There's definitely a trend towards that. If it sounds a little bit like a company, right, I think we are pulling those corporate concepts into the crypto governance space for sure.
Yeah, I mean, I definitely agree with that. I think primarily what we've seen emerge is kind of a small group of people who have been voted in or who have like the largest amount of tokens being able to vote. And it just makes things a little bit easier when there's a smaller group making the decisions. But I think we're seeing different nuances when it comes to different protocols and what it means to be somebody who's in a position of making those decisions.
Yeah, I mean, obviously Synthetics has been pushing for this consolidation of power into like a smaller group of people. And then also specialization as well, right? Like you want a different group of people probably managing your treasury than you want making like risk decisions, for example. They're kind of, you want obviously responsible people in all of those roles, but the people who are managing a treasury, who are potentially investing it on behalf of all of the token holders, have a different set of skills, right? You wouldn't hire the same people to manage your risk as your investment. And so being able to kind of like split these functions up, but still have a small group of people that's delegated, I think is really powerful. And Ryan kind of alluded to like the idea of pods or councils or whatever. I think we're getting to a point now where most projects realize that like having one group of people make every decision is not a good idea, but having all people make all decisions is also not a good idea. So we've got to find that middle ground, and there's still a lot of experimentation going on to like find where that middle ground is. And it's different for each project as well.
So if this is the direction that governance is going in, what's the difference between governance and DeFi and corporate governance? Are we just going full circle?
I use the Fire Phone example as like a kind of funny example of like Amazon having this like idiotic idea that Jeff Bezos was like in love with, and it like created the most chaotic thing. It had like infrared sensors all over it, and it was just like super insane. And even in a corporate governance framework, you can have a really strong CEO create and design and make really bad decisions, right? The checks on power, there's centralized power, I guess, within a corporate governance framework is much stronger. And so the idea, I think, with decentralized governance is to move away from like a single person at the top of a hierarchy and try and like make it flatter. And maybe you have a smaller group of people, but they're more accountable. They don't have the same kind of pull as like a CEO would in a corporate framework.
Yeah, totally agree with that. I think the other thing too is that it's a little bit easier to replace somebody in a protocol where like the organization is flatter, and it's harder to replace people in positions of power in a centralized company, and it can lead to a bad culture, a decline in revenue, things like that. So definitely excited for different models of decentralized governance.
And I would just add that there's obviously so many growing pains with decentralized governance, and we can speak about it for hours. But one surprisingly nice thing about it is it's completely open. Like everyone posts everything on the forums, right? All these, what would in a private company be, just private discussions and meetings and boardrooms. A lot of this stuff for DeFi is public. Like you can go in the forums, you can go on community calls, you can see on chain what transactions are happening, and that's pretty powerful, right? And if you are, an outsider just trying to get smart on the internal decision making of the project, you can get up to speed very quickly by reading the forums. That's, I think, a very powerful benefit that DeFi has.
That's such a good point. I mean, I think as like a user, you can determine based on public forums, do I want to participate in this and become a voting member of this protocol? As an investor, you can make a decision based on things that have been proposed and how voting has gone. Do I want to invest in this protocol? Does it make sense? And yeah, it's a lot different from like the information you get from even public companies.
Yeah, so it seems like there's a certain level of transparency that I think makes it different, even though many of these hierarchies are starting to look a little bit similar. And it's also a little bit more fluid, so you can like leave and enter the organization more fluidly than you just being hired and working there for 10 years and working up a corporate ladder. It's just like a little bit different. But how did these governance systems change depending on the use case for the protocol, right? So I imagine a gaming DAO probably has a different governance system than like a stablecoin protocol, right?
I think this is something we're trying to figure out as an industry, is which governance framework needs to apply to which project. Like, one way I think about this sort of stuff, and it's complicated, is if the product that the project releases benefits from being censorship resistant and decentralized, then it should have a very decentralized governance process. Like Ethereum is a really good example, right? If Ethereum were extremely centralized in leadership and governance, the customer for Ethereum, which is application developers, would not trust it, right? And so the whole use case of Ethereum is this neutral, censorship-resistant platform. And therefore, the governance mechanism, it fits that it would be decentralized and uncoordinated. But some products really do not need censorship resistance. They don't need to be a neutral platform. And I think for those, some level of centralization probably makes sense, to iterate more quickly, to update the project more quickly, and to compete better.
Yeah, I mean, I don't know if I have much more to add to that. I totally agree. I mean, I think the difference is what the output is of the protocol. And you're seeing, I think there's different level of governance needed for a DAO like Friends with Benefits versus a venture DAO where you need to make decisions quickly and work very closely with your investments that you're making. And I think they require like a different threshold of governance.
Yeah, I think with corporate governance, you have many different flavors, right? There's many different types of companies. There's all kinds of corporate structures you can have, and the reason why is because every time there's some edge case, there's a new system that's designed, and the system evolves or whatever. And there's been a lot of time to evolve that system to accommodate all of the different types of governance that you might need for different types of companies, whether it's a partnership or an LLC or whatever. And I think in crypto, we're just not even close to there yet, right? We're just like doing random stuff and seeing what happens. But I do think that eventually it will kind of evolve to a point where you have a new project, a couple of founders turn up, they speak to someone who is an expert in decentralized governance, and they kind of talk about what the outcome is that they're trying to achieve, and there'll be like a playbook. You'll be like, okay, here are a couple of options, here are the trade-offs, and you'll be able to make a reasonably informed decision. At the moment, there's no reasonably informed decisions. It's just a bit chaotic, but that's the fun part, I guess, of experimentation.
Yeah, so it seems like, so we talked about kind of one trend we're seeing being increasing levels of hierarchy in these organizations. Are there any other kind of standards that are emerging within DeFi governance? So basically, have we learned anything that is going to be applied to almost all DeFi protocols moving forward? Or is it still just experimentation phase? Everyone's kind of going in their own direction, trying to figure out what works, and we just haven't got there yet?
I think everyone needs Treasury Management. I think that's kind of how you deploy funds, whether you're an immutable project like Uniswap or Tornado Cash or something like that. You need to deploy resources in some way, and I think that is like one of the most fraught kinds of decisions that you can make, right? And a lot of the tension in projects comes from like, how do we spend this money? What are our priorities, et cetera? And so, I think that that's something that every single project needs to grapple with, and we're still, a long way away from like having a system that everyone can use for treasury management. So yeah, that, like for me, I think that's the kind of universal thing that everyone needs to deal with, is like, how do we allocate resources to get this thing done?
I think the most common standards I've seen emerging they're very general. So it's either, I've seen lots of projects either basically be weighted by stake in terms of like your vote, or voting members with specific skill sets into these positions of voting power. But beyond that, I think we've seen a lot of experimentation, but nothing has kind of taken off, I guess, and been commonly adopted across many protocols.
One other thing I think that's starting to, or at least conversations are beginning to form, and I think this is a really good thing for the industry and projects as a whole, is starting to talk about unit economics, right? Starting to talk about, hey, if we spent, I don't know, $1,000 to acquire this user and we made $2 on this user, maybe we're doing something wrong as a project. And so, these CAC LTV discussions are beginning to really proliferate in conversations, which I think is really good, right? Because a lot of these projects during the bull market, they only had product market fit because of the crazy incentives, right? The tokens they were issuing. And I think they're starting to look back and say, okay, well, this is not profitable to continue doing this. We got to rethink it and really make sure we have organic product market fit. So I think these conversations are still very early, but they're starting to come up in discussion.
Yeah, I think it's a good point, and it's something I've been seeing as well. I think as this industry kind of sobers up from last year, everyone starts to ask more critical questions about the sustainability of these protocols, ranging from everything from, like you said, unit economics to even thinking through like the capital structure of some of these protocols as well. So what are some other things you're seeing kind of take center focus now? Like I said, that the industry is a little bit more sober, and we have time to actually think and process what the hell happened over the past 2 years.
I don't know.
Go ahead.
I'll take that first. Oh.
Yeah.
Sorry, could you repeat the question? I didn't hear it all the way.
Yeah.
Oh, yeah, go.
Yeah, so basically, the question is, like, what are people focusing on today in governance that they weren't focusing on a year ago because everything was just going up and to the right?
Gotcha. I think, harking back to what Larry said, people are focused a bit more on the metrics and establishing a common set of KPIs and trying to make sure they hit the KPIs that they set for themselves.
There's also like just super simple things, like Kane said this earlier, treasury management. Like a year and a half ago, projects didn't sell tokens for cash, and so they were not diversified. It sounds so dumb that they didn't do this, but that's what happened. Now everyone is like, oh, we need to diversify, so they sell for some USDC or some stable coins cash to not be exposed to the volatility of the space. So I think can you guys still? Okay. Yeah, little things like that are starting to happen. Just people are much more practical, right? They're diversifying, they're thinking about budgeting, right? They're starting to tighten the belt, and I think it's a really good trend.
Yeah, I think I've talked about this a lot, but the transition from tracking TVL as like the primary metric that we're measuring success by, to tracking fees that are generated. Like at some point we need to transition to a sustainable economy where people are paying for services, revenue is being generated, that revenue is sufficient to cover, to Ryan's point, like if you're making $2 in revenue and it costs you $1,000 to make that revenue, that's problematic, right? So being able to even start to like quantify these things and say, okay, how much revenue are we making on a monthly basis? Like what are our fixed expenses? What are our variable costs, et cetera? And really starting to like get to a point where the things that we're doing are sustainable. And I think that will happen in the bear market, because if you're, you can't do unsustainable things forever in a bear market. You run out of money, and so I think that people will be forced to really start thinking about, like, what are the things that we're doing that are sustainable, what are the things that are not sustainable, especially when you're kind of printing money to like pay for incentives, and it becomes like much harder in a bear market to print free money and pay for people to do things. So you need to actually have fundamental revenue.
So on the topic of treasury management, what are DAOs getting right about it, or what have they got right, and what are they getting wrong about it? So obviously we mentioned one thing that maybe a handful of protocols got wrong, which is paying too much of their token supply to incentivize that activity. But what are some other things that maybe were kind of wrong that we didn't think about, or things that are kind of we got right?
I mean, one thing is don't put your treasury into like a Ponzi stablecoin. That's probably something that I think we've learned over the last few months. But I think the reality is that like you have to have a diversified treasury. Like people were sitting there saying we've got a $10 billion treasury and it's all their own token, right? It's like just a bit insane. So I think like having a diversified treasury, having like good risk management, making sure that your burn rate, and I know this sounds crazy to like be talking about burn rates, but like if you're a project, you have a burn rate. If you're spending $10 million a month on like 1,000 employees and you make no revenue, it's just not going to end well for you, right? So like really thinking about like your burn rate, your cash flow, how much have you got in actual stable coins? Can you even sell your token? All of these things are, I think that things that projects are being forced to like reconcile now.
I think a big part of that is putting like the person with the right skill set in charge, or the people with the right skill sets in charge of managing that treasury, because I mean, it's very similar to a fund. Like if you're trying to make your capital efficient, you have to be analyzing what you're putting your capital into, and that, I mean, I think what you were alluding to, like that's what happens to a lot of protocols, like working with specifically like Anchor protocol and trying to make their capital efficient, putting a big chunk of it in there because you don't have to actively manage it, but we know basically how that ended. So you really have to have one, diversification, risk management, and then I think the right people with the right skill sets analyzing the actual investments.
Yeah, one other thing I think the successful projects do really well is they think very deeply about capital allocation. And so, since money is now all of a sudden a finite resource again, it's very important to understand, what is the highest return we can deploy this money as a project, and let's do as much of that as we can. And so, just trying to understand what is the opportunity set, right? If we can spend, I don't know, $10 million investing in product, or $10 million investing in marketing, and marketing would yield, I don't know, let's call it 10% return on investment, and product would yield 15, right? The good projects are doubling down on the 15% return. And a lot of this is art, not science, and having an intuition for, is this going to be money well spent, is what I think some of these successful projects are starting to think heavily about.
I mean, I think that's a really good point, and it's something that we don't really know. Is the wisdom of the crowd something that can do this better than like a few people in a room making a decision? I think we're going to find out over the next like 12 to 18 months. It's going to be interesting.
Yeah.
So what is the evolving role of the investor in DeFi governance, right? So is it realistic to expect token holders to be active participants in governance? Like, where should they contribute? Where should they not contribute? And I think maybe, Lauren, this would be a good question for you. Like, what capabilities do you need in-house to be a successful contributor in DeFi governance?
I mean, I think you just have to have realistic expectations about the participation of your investors. I think Electric Capital and Snapshot, I believe, put out some really good research on this, where I think they found that around 55% of wallets voted once, or at least once, I mean. So, and most of the time, they just vote once. So it's getting voters to actually vote is very difficult, but I think it also depends on like the size of the stake that the person has and how much they feel they can affect the outcome of the change, because it depends on the model of government it's set up. If it's based on your stake, then if you have a tiny stake, you might not feel incentivized to vote. I think in terms of infrastructure, there's a number of people that are working on this, but having notifications be received when there's a new proposal, being like actively monitoring these forums is really important, and not something that like maybe a small team has time for. So I think there's a lot of problems when it comes to like incentivizing people to vote, making sure they have enough information to vote, but I think that's what this experimentation is for and what we're seeing a lot of people working on.
Yeah, and maybe a generic, or a general rather, observation is there's kind of, on the fund side, there's 3 approaches to voting and governance. One is they do it in-house, right? So they have a team that tracks governance proposals and they vote themselves. On the other side of that, the other approach is they delegate, right? Sort of like have a proxy. They delegate it to someone who has the time to check what's happening in each project and vote accordingly. And then there's the hybrid approach. So some funds, they both delegate some of their stake and vote in-house on the other half. I'd say the most common one, though, is probably not voting, right? Because some funds, they just don't have the infrastructure to do it. It's a lot of work. It requires quite a bit of time to know how to vote well. And so a lot of them are absentee voters, unfortunately.
I mean, I think one thing that we're going to see over this bear market is there's a lot of projects that have very long vesting schedules and large holders that are locked up. And we're just, we saw this last bear market as well. We're going to see a lot of people who are, desperate for liquidity that are just going to be dumping on projects regardless of whether the project's doing well or poorly. It's just going to be indiscriminate. And so I think that a lot of projects are going to have to think about, like, what do we do about this, right? If we've got a large token holder that is dumping on us, we've had some ecosystem projects that have kind of had to grapple with this problem. And one of the things that we saw is that Thales, a synthetics ecosystem project, had this like token distribution where they were distributing tokens to SNX holders on a pro rata basis, right, as an incentive. And the SNX holders were just dumping on everyone, and so they said, actually, let's just stop doing that, and they stopped giving them the tokens. So I think we could see some like very mercenary behavior that kind of happens, where even potentially an investor who invested into a pure DAO, the rest of the DAO might say, actually, you know what, we don't want you anymore, and like rug their tokens. There's going to be some very interesting decisions, I think, that come out of this market, because when you're a pure DAO, there's no legal recourse, really, right? So I think we're gonna, it's going to be fun.
So isn't governance by token holders, in a sense, like antithetical to like the original ethos of the industry? I mean, Ethereum, for example, for a very good reason, does not have governance at the base layer using tokens. Like, why is it acceptable to have at the application layer? And is this the end state, or are we just waiting for new primitives, whether it be like an identity primitive, to enable different forms of governance moving forward? And what does that mean for the role of token holders in governance? Will they be disenfranchised eventually?
Yeah, I think it's interesting, right? Because like Ethereum has governance, it's just not baked into the protocol. Like an application that's running on top of that has maybe more of a need for coordination than like a base layer consensus mechanism. But I don't know that I can like really strongly justify that position. I think it's just kind of like the status quo that's emerged. Because obviously Ethereum does very well. I mean, we just got through the merge without having coin voting or anything like that. We somehow managed to do it. So it does work. I mean, it's slow, obviously. It would have been nice for it to happen in 2017, but it takes a little bit longer. But we do eventually get there. So I don't know. I think it's a tough question. I think it's something that we're going to have to grapple with. Like, should we have as much governance as we do in all of these applications?
I agree. It's a really tough question. I mean, on one hand, I would say like the beauty of crypto is you can build whatever you want, and people either use it or they decide not to use it because they don't like the system that you put in place. But on the other hand, I do see an argument around if a protocol is set up in such a way that somebody with the most stake can basically decide what happens to the protocol. It's at that point where it becomes a little bit antithetical to crypto, where the premise is access for everybody.
Yeah, there's definitely an element of plutocracy if you can, essentially buy the tokens and vote with them. But, I don't really view that as too much of an issue. I think it's a little bit taboo in the crypto space to say it's okay to extract some value for a job well done, right? And a lot of projects, if they turn on their fees and if they generate revenue, they'll have more money to play with. They can reinvest that into the product. They can hire more people. They can spend money on marketing and a really nice website. And I think that's all good, right? It's good for the end customer. And so it's a matter of trade-offs for sure. But generally, I don't view it as too much of an issue, even though that's probably a taboo thing to say.
Gotcha. Well, it looks like we're out of time, but thanks for a great panel.
Yeah, thank you.
Thanks.